Traders at Access Bank say they expect the Treasury bill market to remain quiet ahead of today's bond auction. Adamma Mbachu, team lead currency trading at Access Bank, joins me now to share expectations for today's auction. Thank you so much, Adamma, for your time. Let's start by getting your perspective on your thinking around the direction of the market, because I did see in a note released by Access Bank that you're anticipating that the auction will be oversubscribed and you're also expecting a decline in the issue yield.
Okay, thank you so much for having me. Yes, all the energy is focused on today's auction, and the market is actually being a bit quiet, trying to find out the outcome of the market. Yes, DMO will be offering 150 billion across the 2028, 2036, and 2050 maturities today, and the traders have all put in their bids and they are waiting the outcome of the auction. Yes, we expect the market to be oversubscribed, given that recently CBN has stopped issuing OMO, and then the major outlets for investing funds have been limited. So most investors are putting their money in fixed income instruments, and so this auction will be a very big opportunity for them to, invest in. So we expect an oversubscription at that market. We also expect that the yield will come out slightly lower, given the huge subscription that we expect for this auction. The last stop rate was at 12.35% for the 2028 and 13.15 and 13.25 for the 2036 and 2050 maturity. So we expect some sort of decline of about 25 to 50 basis point drop in today's auction.
Right. If I can move on to the foreign exchange markets, and as accessing the impact of the central bank's move against the bureau de change operators, have we observed a notable increase in your view? Because sadly, it's really challenging to get data on supply, but has there been an increase in dollar supply in your view to the markets, especially to the banks that are now taking the responsibility of bureau de change operators to service the retail market?
Yes. Impressively, CBN has actually improved the supply of FX in the market, especially for the invisible space. And these are the people addressing the retail requests, what the BDCs were doing before. So CBN has actually increased allocation across all banks for that space. And they have also maintained subsequent interventions in other markets, such as the SME, the SPI interventions, and of course the retail auction. So we also expect more improvement in supply, given a good start by the CBN.
All right. We saw that the NAIRA gained about 17 kobo at the I&E window in yesterday's session. Do you think this is sustainable, or do you think just a flash in the pan?
Well, it's just market trades and market dynamics. Market has been up and down. Yes, the market opened this week with about 411.23 and closed yesterday at 411.50. So, but the 17 kobo is not really such a significant move. I just attribute it to market dynamics, and sure, we expect the market to trade around these levels for 11.5, subsequently to the end of the week.
Well, what we've also observed over the last couple of weeks is that that market has been relatively stable, and to the credit, I imagine, of the central bank in terms of supplying the market.
Exactly.
But at the same time, we also have to point to where the oil price is. It has come under some pressure over the last week or so, but overall, I think many should be happy with where the oil price is. What's the sentiment around the impact of the oil price on the NAIRA stability going forward?
Well, yeah, the impact of the oil price, should create a bit of respite in NAIRA stability, given that we will expect more flows, but we have seen a bit of stability around the accretion to reserve. We also know that the market is actually, there's a bit of gap in that market where we have the demand outweighing the supply, and we have long outstanding obligations. So it's quite a lot of work on the part of the central bank and other players in that market to see that they close that gap to create some sort of stability in the foreign exchange market. However, we can actually commend the CBN for their subsequent intervention, as we have seen the rates being stable at 4.11 levels.
Over the last 18 months, there's been a lot of talk about a build-up of demand for dollars that unfortunately has not been supplied by the central bank or the I&E window. But have we seen any significant improvement in that in terms of dealing with the backlog of demand?
Yeah, I think some sort of discussions and measures the CBN will come up to see how, like I said, they can actually create a bit of respite or narrow the gap in that market. Like now they're focusing on the retail, where they have increased subscriptions for the invisibles, and they have maintained interventions for the FPI. They have also maintained their interventions for the retail. So I know that they would have some sort of their discussion to see how they can actually address the issues around the foreign exchange market, while expecting the banks to cooperate with them.